I will teach everything regarding my strategy in this video from beginning to the end, fundamental analysis and technical analysis, everything. I will explain it on this video. So pay attention and watch the video from the beginning to the end. So first, let's start with fundamental analysis. So this is Forex Factory. Even every day you wake up or even beginning of the week, you go to forexfactory.com and check all the news they have that week and the time they have that news. So you will know when you are trading whether news is coming up or not, because news can destroy your trade or can affect you one way or the other, because when you are in a trade and news move against you, it might take you out. So something like that. So it's important to check your Forex calendar, which is forexfactory.com, to see all the news they have that week. So when that particular time is coming closer, if you're inside trade, if you wish, you close and wait for them to release the news before you continue looking for another confirmation, or if you wish, you can still send into the market. So this is a small explanation regarding the news. This is the forecast and this is the actual, this is the previous, meaning that now they want to read this US news tomorrow, this news tomorrow. So this is the previous, the one they released before. It was 51.8, and this is the forecast. This Forex file they have forecasted that it will be 52.2, which they are saying that it will normal is better than what they released before. So they are saying that it will be better, it will be good for US this time around. But the actual, the result we all are waiting for is not yet out. So for you to how to understand this is when the forecast, which is this, is greater than the actual, it means that it's bad for the USD, meaning they forecasted that it will be 52.2. Then if they read this news and this actual came out to be 51.1, is bad for US, then it's going to be buy for gold. If you are trading gold, it's going to be buy. Then that's what I mean by when the forecast is greater than the actual. And when the actual is greater than forecast, it means that it's good for US. So it means that as they forecasted that it's going to be 52.2, it might end up being 53.1 or 52.8 is better than the forecast. So that's how you will know the one that is good and the one that is bad. So that is it for it on this news, on this fundamental. This is what they call fundamental analysis. It's all about news and war, all the things that's happening around the world. That's all of them made up the fundamental. Then this is technical. Technical is when you look at the charts and predict what is going to happen through what is happening on this chart. So first, before we can start going deep, before I trade, I always identify the trend for that day. I don't just jump into a trade. No, I always want to know where the trend is. I follow trend. If we are uptrend, throughout that day I'm going to be buying, and if we are downtrend, throughout that day I'm going to be selling. So that's how I trade. And how do I identify my trend? It's from 4 hours time frame. This is as in daily separator. So I'm going to remove it. Click on settings and go to here, scale. Okay, events, and mark it. Then it should be out, so it's out. So this is how I know what the trend is. So you can see that from this, level, sorry guys, I want to reduce the size of that. Is the line is much visibility. I don't know whether this is it. I believe so. It's not, but I don't want to waste my time doing that now. So let's just continue. Let me pick another one. I think I can use this. So this is where this market stop, a buy and sell and get to this level and stop. And you can see what happened here. Started forming, this is the lower low and this is the higher high. And you can see the market break this higher high and form another higher high and break it, and then break this lower high. So now, how do you know when market change character? Because I'm going to teach you how to read market structure. You can see that this thing keep forming higher high and keep taking it out, keep moving up. So this is how you can read market structure. So let's start from here now. This market started forming started forming here. This is the higher high and this is lower low, and market take this lower low out and form another lower high and form another lower low, and it didn't take out this. You can see that it didn't take out this lower high, and it broke this lower low, then give another lower low here, and it form another low as in higher low here, and it didn't take out this higher high, and it broke this lower low. You can see that it formed another lower low, and this previous higher low, market didn't take it out, and it broke this lower low and form another lower low. And you can see that when it form another lower low here, market then started buying and take out this higher low. Sorry, this particular one, take out this, because when it formed this is the lower low, and when this one buy as when market went up here and drop and broke this lower low and form another lower low, this higher low then is valid. So now market then didn't go down much again, started buying, and the process of that buying started forming. Okay, it took out this, yeah, it took it out. 1 minute, guys. Let me see. No, it didn't take it out. It didn't. So it didn't take it out. So this is the lower low, the new one, and this is the, you can see this is the higher low. So market started forming without market forming this, because you can see the market form another higher high here and see form another form higher high here and see form another lower high here. But without this higher high and lower low market formed here, as long as market stop forming lower low and turn back and started buying and take out the last lower high, and this particular candle is what take it out and closed above it. What this confirmation is telling you that market have changed character, because from this level, all this level, market is trending down here. You can see that it's kind of trending down, up, down, up, down, up, down, up, down. But what happened? From this level, it didn't continue going that down again. No, it changed. And what did it do? It then continue going up, which is like this. Then continue going up and take out this higher low. Make market take out this higher low, market have changed character. This downtrend is over. And if you are people that are using trend line, you can see that the market also broke trend line. because people that use trend line, whenever market broke trend line, it signifies change of as a change of character. That if it's downtrend and the broke trend line upside, it means that market is changing to upside. So when market broke this higher low here, it's telling you that this market have turned to uptrend. It's no longer a downtrend. And as from this moment, you start looking for buy opportunities. Don't look for any sell opportunity. Yes, all this market, it doesn't mean that the market is not going to sell. It will sell, but sell will move more, as in buy will move more than sell, because the trend is uptrend. So the buy you took will give you more money than when you sell it, because you can see it by yourself that since he took out this higher low, what did he do? He come back and retest it and move up and retest and move, drop and move. You can see that it keep going up. It's not going down, it keep going up since then. So if you are looking for buy opportunity from all this area, it will favor you more than when you are looking for sell opportunity. So this is how I determine my trend. You can see what happened here. At market, when market take out this high to form to confirm the change of character. People call it change of character. So, and it dropped and went up and broke here, and then come back and take out this lower low. It did another change of character here, but the change of character didn't last. It pushed up again. This is another change of character for buy again. So you continue with your buy or with your uptrend. So you can see that since the market started trending this up, it kept moving up. It didn't do any change of character to the downside till now. So this is the lower low, higher high, higher low, higher high, higher low, higher high, higher as in lower as higher low, and higher high, higher low, higher high, higher low, higher high. You can see the way it's forming higher low and higher high, higher low and higher high. The market came and take out this higher low. Now market have done change of character here. This is Monday. Starting from now, any moment from now and tomorrow, I will be looking for sell opportunity only. I'm not buying anything. I'm not looking for buy opportunity. As long as market have done change of character here for me, what I will be looking for now is sell opportunity. I'm not going to look for buy opportunity, because any buy, as long as market have done change of character for downtrend for you, any buy opportunity, any buy setup will not go that far. Will not really sell for you. But sorry, any buy opportunity will not really buy for you. But if you sell opportunity, it will go more for you. So that's why it's good for you to follow trend. Leave all these tracements that is inside the major trend. Don't trade it. You might make money with it, but you will not really be that profitable with it than when you follow trend. They always say trend is your friend, so follow trend. So this is how I determine whether I'm going to buy or whether the trend is uptrend or downtrend. There is something, this kind of a thing can still happen. You can see that market started forming. 1 minute, guys. You can see that here. From somewhere here, market started doing higher high, lower low, higher high. It keep going down. So any buy opportunity, any buy you are taking here will definitely fail you. But look at the way the sell is moving. And this particular market, the market did change of character here. Market broke this higher high. And look at the lower high here. Market broke it here. And this is where the market did change of character. This is level market did change of price. Since then, look at what it's doing down there. So if you are looking for sell opportunity here, it will go more far than buy. You can see it by yourself as keep going down. This is on 4 hours time frame. So the market keep trending down from here to here and keep doing higher high and lower low. When it get to this level, it didn't do more lower low. Then it take out these levels with shadow. Then come out and take out this. Sometimes I use this shadow as my break. It's always on 4 hours time frame, but it depends, not all the time. But sometimes it's good for you to wait for the market to break with body. But when I saw all this consolidation and spike down and take out this level and spike up, then take out this side, I use it as my change of character. So I started looking for buy opportunities from here, and since then you see what market has been doing. Just keep up, higher high, lower high, you break the higher high, lower high, you break the higher high, lower high, you break the higher high, lower high. Then see what happened here. This is the higher high and this is the lower high. The market didn't take out this lower high to do change of character, no. And the market started consolidating inside all this area for a long time. So when you saw this kind of a thing, or when you see this kind of a market is going to just leave that market for that moment. It's not doing, it's ranging, because it's not doing change of character for that trend, and it's not taking out the high to continue going high. So it means that it's ranging. Just leave it. What you have to just mark out this level as your high, mark out this lower low, and wait for market to take out any of them for it to continue. Market take out this side, you can continue looking for buy opportunity. Market take out this low, you can continue, you can start looking for sell opportunity. So market later take out this side. Then now, where are you going to call your lower low? Here. This is why I'm using this particular place as an example. Where are you going to call your lower low? Here, you cannot call here your lower low. You cannot call here, you cannot call here low. So look at the appropriate lower low. This is the valid lower low for you. This is the valid lower low, not here, not here. Why? Because here is where that move started. And when that move started here, it didn't take out this high. So this is the only low. Whatever market is doing here is not the valid lower low. This is where started it. So if it didn't break it immediately and keep consolidating, anytime that it broke it, anytime that it break it, this is the valid lower low. So you have, so if you want to start waiting for your change of character, it will be whenever market take out this low. That's when you will see the change of character to the next phase where market is going to. So when market take out here and I started looking for buy again, and I took buy, I think here somewhere, and I lost the trade because it didn't really go. It just go and somewhere it gave me profit, and I was expecting market to take out this side, didn't, and it take out the profit and take out the profit, and later went down and take out my stop loss. I lost a trade here that day. So since then, market started doing what? You can see that I started doing higher high, lower low, and higher low, lower low, higher low, lower low, higher low, and this change of character, lower low and higher low. And what again? Lower low, market didn't continue. Then it started going up, and this is our low as a higher low, and market take it out. So when market take it out here, that's when this market did change of character for uptrend. Then since then, see what the market is doing. See the way it's moving. Just keep moving up, keep moving up. So this is how you can identify your trend and know where market is going and face towards that place. If it's going down, face that down. If it's going up, face up. So you have to know how to identify this and read this market structure very well to enable you to know to follow the trend very well. Because now markets have done change of character here today. So as from today, if I see confirmation today, I will take a trade, or tomorrow I will take a trade, and it will be sell. Any buy confirmation I'm seeing, I'm not taking that buy. But if I see sell confirmation, I will take the sell. So that's how I determine my trend. So on these 4 hours is where I look for my trend, and my entry is on 15 minutes time frame, which is here. So this is the 15 minutes time frame. So how do I take a trade? This is how I take a trade. Let me put the demarcation, the season break event that shows that where you can see that today started here, on Friday started here. So this is how I trade. You can see that market started ranging from here. You can see the market is range. This market open here. This is around 12 a.m. in the morning, and it started ranging. Range and range and range and range. You can see the double top here. You can see this double top market form here, and you can also see the bottom. Then what I'm going to do now is, let me expand this so you guys can see very well. I think you guys can see it now. You can see that market kind of consolidates here, broke it down, and retest there and drop. This is a strong level because market didn't take it out. All the consolidation, it came back and retested and drop. Then market started buying and go back to the same zone again. For this is a zone now. Go back to the same zone again and drop. And the market go back to that the same zone again and drop, and test it again and drop. So for me to buy this gold, I will like to see market break this zone upside, meaning market will buy and break it up and retest it. Then market retest it, I will buy at this point and I will target somewhere here. So that particular candle that break here must close above it and retest it before I buy, and I will target 1 to 2. So what's happening here is this market broke this. Look at this particular one, broke it, but it didn't retest and keep moving. I didn't jump in because I don't trade aggressively. If I jump in here and my support is somewhere here, it will be very big. That's why I would like it to retest. And if I enter here, my support will be below here. So unfortunately, this thing didn't return. I started buying and get to this level, which market has been respecting. Like 3 days, for 3 days, market has been respecting it. So when this market get to this level and started dropping, I didn't take the buy again. I didn't take the buy again because we already did what we want to do here, and it hit strong resistance level. That's why I didn't take the buy. And look at what it did. It dropped and take out this low before it started moving up. This is what they call stop loss hunt or inducement. Some people still call it inducement. Some people still call it, what is it called, dollar. Then just go and take it out, because know that people that bought market at this level, their stop loss is below here. So they just went there and take them out before this thing spike up. So that's what they just did. But I didn't take the trade. So look at what happened here again today. Market started ranging here in the morning, started consolidating, giving you double bottom, up here, double top, and you can also find W pattern here. You can also find W pattern here. This is W pattern. So when market found W pattern, you wait for the market to take out the neck. That's how you trade W pattern, and I still use it. So if found W pattern, then you wait for market to take out the neck and retest. You buy, and your stop loss will be somewhere here. Unfortunately, this market didn't take out this neck. It took it out with shadow and started dropping. So that's why I didn't take this trade today, because it didn't take it out with body. If you take, I wish it took out this neck with the body. and retest, I will buy it. But it didn't take it out with body, it took it out with shadow, and I didn't buy it. And see what it did, it dropped, it slumped. Then I didn't take any trade today with this W pattern. So this is how I trade. So this is the example that worked out what I'm trying to explain to you, my strategy. So this is the one that played that very well. So look at what happened here. This particular one played that very well. You can see that market started consolidating this on 15 minutes time frame. It formed different W pattern, different pattern, just kind of forming different pattern. You can see W pattern here. It formed different patterns, keep forming different patterns, just kind of keep consolidating. Already what I'm looking for is uptrend. I'm not looking for a downtrend because I know that we are uptrend. So when market keep consolidating and then took out this level with the shadow, I didn't mind because what I'm looking for is uptrend, because I know that we are uptrend, the trend is up. So I marked out this level this way. I'm waiting for market to break this and retest, which market did. This particular candle break it and this particular candle retest. So I entered buy here and it went up and gave me 1 to 2. I made 1 to 2 out of this trade. This is how I catch the trade. And my stop loss is below somewhere here, because your stop loss should not be close to this body. No, give it a little bit space, because sometimes they will take out this high and still drop it down again to take out this low. But they know that people's stop losses are here. So sometimes I always use psychological levels as my stop loss. For instance, this is 0. What is the next psychological level? Okay, let me 1 minute, guys. Let me bring it out so you guys can see all the psychological levels. You can also use it. This line you're seeing, all of them, they are psychological level line. So now, market take out this zone I was looking at to buy gold and retest. So as I'm buying this gold at this level, my stop loss should be somewhere. My stop loss should be somewhere here, but I'm not going to use here as my stop loss. This is psychological level market touched and respected it. Then I would like to use this low as my stop loss. The low of the next psychological level is what I'll use as my stop loss, because I have seen it several times. As the market take out this high, they will drop it down to take out this low before moving this up. So if you put your stop loss close here, they will take you out. But if you put it below this, the next psychological level, they will hardly take you out. Whatever makes them take out this psychological level, forget about it. That market is going down. So this is how you can set your stop loss to make sure that you put your stop loss in a safer place. So no matter what they are doing, they are not going to fake, as in take you out and reverse the market to your favor. So this is how you set your stop loss. If market form double top or head and shoulder or consolidate within any psychological level, use the next psychological level at your stop loss to keep your stop loss safe. So give the market room to breathe, or if they want to do stop loss hunt, so as they are not going to get your own stop loss where you put it. So this is another example here. You can see what this market did. You can see that this market dropped to here and went up and dropped this sell and this buy. You can see this level that market keep retesting it. You can see that market keep retesting this level with the shadow. It tests it and drop and go up and drop and test it and test it and test it. You can see the way it consolidates. So if you look inside of this one candlestick, you can still find W pattern here. This is You can still find W pattern here. This is the first leg, up, down, and you move up. So there is double top here for you on this candlestick. So then I will use here as my entry, this particular level as my entry, and this level as my stop loss, because market touches psychological level. So here will be my stop loss. So when market, this particular candle broke this zone and retests, I'm buying here because we are uptrend, and I'm targeting these highs because already know that market can hit on this side, by which this high just has hit this side and started dropping. So I took a trade here. So let me make it simple for you guys. Forget about double bottom, as in forget about W pattern, because sometimes it might be hard for you to identify W pattern. Whenever you see market ranging something like this, one candle ranging all together, giving you different levels. You see the way market range here, go up, down, up, down. At this point, market really didn't really move up or down. So when market consolidates, kind of consolidation here, just mark out this high, because that's the high. That's whenever market break it, retest, buy. As long as if we are uptrend, and your stop loss should be somewhere here. So the same thing. So that's what we'll be looking at. Forget about W pattern and M pattern and all this, because it might be hard for you to identify. But what I just explained now, look for consolidations, and whenever market break it, take a trade. Look at what happened here. But this trade, I didn't take it because market is uptrend. So when they confirm this sell here, I didn't take it. But I know that it's an uptrend, so I'm not selling. I have to keep to my rules. That's why I didn't take it. But it played out, because you can see that market keep consolidating from this level, and this is the first consolidate here, give up here and low here, up here, and when it's come, you can see this is double top. So this is the low. You mark it out. So you make market take out this low. It should be entering from here, and your stop loss should be above here, because this is psychological level market hit last. So here is your stop loss should be, and look at what happened. You broke it and tested it here. You are selling it from here. Yes, it kind of enter minus, but later drop, you recover, and you made money. And again, if you miss out this zone, you can also take on this zone, because you can see what is doing here. 1, 2, 3, 4. Triple top and 4 top safe is here. So allow market to come back to take out the neckline, which is this one did, and close below it. This one came back to retest it. You are buying here, and your stop loss will still be here. And look at the one market did, it dropped. But I didn't take this trade because gold is in uptrend when this thing was happening. So I didn't bother to take it, because it's not a downtrend. So I must follow the trend. So look at what happened here. Same thing happened here today. You can see what happened here today. First in the morning, I was looking for buy, but market, the gold didn't buy, which kind of consolidates here and end up taking out this neck. And it didn't retest. It kept dropping. And after then, look at what it formed here again. It still take it out again for downtrend, for down. But I didn't take all this sell because gold is an uptrend. That's why I didn't take all this sell. Then it take out this, and it didn't retest. It slump, it dropped. I didn't take any of them. And now gold did change of character here, because this is the low. What I told you guys, what I taught you guys on that forward time frame, this is the low. So market did change of character here. This is the low. Okay, let's go to 4 hours so you guys can see it. This is the low. You can see this is the low here. This is the line I marked out. Let me take out this line. This is the low here. So let's go back to 15-minute time frame. You can see it. Market take out that lower low. So it did change of character, because this one broke it with the body. It did change of character there. So now I'm looking to sell gold, because the market have done change of character for me. So what I'm looking for now is market is good to break this low. It's good to break this low. So this is what I'm looking for now, for this market to sell and take out this low and come back to retest it. I'm selling it here, and I'll be targeting 1 to 2. So this is what I'll be looking at for now. Market to sell and break, take out this low and retest. Then I sell here, and I'll be targeting somewhere here, and my stop loss will be here. You can see that gold kind of ranging here. You can see what it's doing here. It's not doing it. It's not going anywhere. You can see by yourself. It's kind of ranging because market ranges in different ways. So long as you see that it's ranging, it's not moving, mark out the high and the low and wait for market to break it according to where the trend is. Now the trend is downtrend. So if markets take out this high, I'm not buying it. I am not buying it because I know that the market is downtrend, so I'm not buying it. But if you take out this low and retest, I'm selling. So this is what I'm looking at for gold right now, for him to take out this low and retest, and I sell it here. My support will be here, and I'll be targeting 1 to 2 somewhere here. This is what I'll be looking at for. So this is how you guys we trade this strategy. This is my strategy, and this is how I trade. So if you are on my Telegram channel, you will be seeing the signals I post, and I do mark it out this way. This is how I take all my trades, and I've been using this strategy for years. And guys, one is better you focus on one strategy and master that strategy. Jumping from one strategy to another will not make you a profitable trader. When you use one strategy for years or for months, you will definitely be successful with that strategy, because we will master the strategy in and out. We will know everything about that strategy. You will know time to trade and time not, and you will know when to trade it and when not to trade it. And it will be awesome if you focus on one pair as well. You will master that pair, know how that pair move, and how that your strategy works on that pair. It will give you a very good leverage to be successful in this game. Jumping from one strategy to another and allowing market to control your emotion will never allow you to be a profitable forex trader. So for people that don't know how to use TradingView, this is TradingView.